Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for October 4th, 2023. Just ran bingo night fundraiser for the soccer club. Some local folks came out. We raised a couple $100 at the local brewery, and good times. Had a couple of my young players there with their parents, and it's good to see them. All right, this is a quick look at Brian Lancaster's kind of graduation exercise from the Creativity 202 course. As part of that, the foundations course. As part of the foundations, he began trading the Forex, which he had never traded before in his life, and some noteworthy moments. A man learns something from picking up a cat by the tail that he can learn in no other way, thanks to the great Mark Twain. And now he understands why. Because posting charts over the last few months in continuous coaching, he's learned things that he could never have been able to verbalize before, and only now we're starting to consciously comprehend and understand. It takes that long to quiet the noise, and it's your dedication and effort. I'm just reporting what I see. Now, he has, in his first 100 trades, these were the patterns that he was trading. These are all generation 2 of the RLCO framework. So they are refined versions of what we called the generation 1 patterns, which was pattern 1 through pattern 7. And after a few years trading those, we were able to define them with a little more precision for the supported spring crossing, the collapsing dragon, the kata 2, supported fall crossing, emerging dragon, and the Z3 breakout. These are the number of trades in each pattern. These are the average wins in terms of R. And he is wanting to figure out the difference between the SSC and the SFC, and why was it? Was there a difference? Was it the market condition, or is it me? My spider sense is that the SFC works a little better because what you're getting there is a high, a lower, a low, a lower high, and now you're getting ready for this play. It's not quite a collapsing dragon, which would be underneath the RL10, so you're getting that short. So it's already heading in the direction of the primary trend, whereas the SSC is the counter trend trade after a harsh winter. And so I'm not surprised to see the SFC work. By the same token, you can get an SFC after a really nice long run up, and you have the summer in MACD turn to fall, and you can get that one short after a really strong and actually a complacent move up. You can get a surprise move that way. You might also see it as a continuation pattern. This might have been enough to put it into the fall condition, and now you're getting that one, but you already have this strong move up to give that a buy on dip flavor. And so the SSC is the hardest one to believe in because you had a harsh winter and then just enough recovery to give you a counter trend trade. So that one fails a little more often, doesn't go quite as far, maybe 10% less, and that's what he's seeing in here. He's looking at ways now to start improving his R return by using a smaller risk box. What I'm going to say is don't do that. That is perfectly satisfactory. And what you have is a lot of evidence in favor of exactly this kind of trade frame where you had some kind of setup and you saw the yellow zone, and then you made the long move or the short move, and you use a standard risk box And then using that framework, you got that kind of an average win, and you have a lot of evidence. If you want to improve your R multiple by changing the size of the risk box, then that means this doesn't work anymore. That's because you're going to use a different architecture. What I would say is rather than improving the R multiples, you should be improving the return, dollars. And so it's the dollars per trade that tells you what your overall risk is. And then you run that into a trade frame, which is your trade architecture. You have a lot of evidence that the geometry that you're using is successful. So don't change any of this. Just increase the number of dollars at risk per trade. Like if you were starting out at 10, go to 25, or then to 50, then to 100, until you get to the point where you're noticing your feelings taking over, and then back off one slot. And so you can trade it automatically. Then at some point you increase the dollars at risk per trade as a percentage of portfolio, and you let the system earn more dollars per trade, but don't change the architecture. Accumulate evidence in favor of the architecture. Well, what does that architecture do for him? Well, I'm going to take a look at his performance charts in the usual way. Those of you in foundations will recognize this. Those of you taking personal coaching will recognize this. So the first thing I'm going to do is look at his maximum win was 4R. His minimum or his maximum loss was minus 1.01. That's good. 64 winning trades, 35 losing trades. So that's 2-to-1 wins to losses. And his average R on a win was 0.7. And his average loss was minus 0.32. That's 2.5 to 1 on the payoff. So you're winning twice as much as you're losing, or twice as often. And when you win, you're getting a payoff of 2.5 compared to for every dollar you lose, you're paying off 2.5. So that's pretty good. That gives you like a 5-to-1 leveraged advantage in the coin flip. That's pretty good. That's a coin flip you win 2 out of 3 times. And when you win, you get paid 2.5. When you lose, you pay 1. So how often do you want to trade that system? Answer, forever. So I'm now going to look at his histogram, and I'm going to look at 3 things. Number 1, no losses greater than minus 1. So he has eliminated the fat left tail. That's good. Check. Number 2, we're going to look at from minus 1 to plus 2. We're going to look at the shape of that histogram, the normal trades, because we're aiming for 2 and risking 1. So what happens when we just get normal trades? It's positive expectancy, and it has a normal looking shape like you would find in nature. That means that the majority of his trades are in this area, about 85% of them. And it's positive expectancy, so that is a robust, repeatable system that's under control. And then the third thing I'm going to look at is a fat right tail, meaning that there are trades that return better than 2R. So sometimes good things happen to bad people. What that really represents is the next higher level time frame is coming in to reinforce your trade right away. And it carries you further into the next leg by surprise. We don't need this to be positive expectancy. It's just a bonus. We're positive expectancy, and we get paid to do our work because of this between minus 1 and plus 2, where the bulk of the work is being done. So that's good. Now, note after his rolling R average has stabilized around 0.35. You can make a living on that. His trade sequence plot, we're looking at the sequence of R's. And now you notice that above 2R, this is spread out through time. And the results come from the bulk of the positive work that he's doing here. He's not relying on a 20R trade to pay for everything else, because then that's kind of an anomaly. So this is a good production chart that says we have a reliable, repeatable system that should continue to produce a cumulative R equity curve that looks like that. That's what you want, up and to the right in a very orderly fashion, very controlled drawdowns. That's pretty good shooting, Tex. For those of you keeping score at home, his written rules using the MMRB, and he's got rules for the specific entries to include what to do on successful trades and when to move stops, some planning considerations with respect to management of the trade, and then things for him to continue to work on. This is exactly what we're looking for in the industrial production. We want a factory, a machine that produces R, because that will translate into dollars, because we have a reliable, scalable system. So everything's looking good here. He's going to present this in a more formal way during the annual research weekend coming up, which you don't have to be a Foundations member to participate in. You can be a member of the audience and take advantage of all the hard work these guys are doing as another workshop, and you get access to highlights from previous year's research weekends. And that's going for a sale price in October of $497 for the research weekend. And there's a dozen guys getting ready to present systems and performance like this as part of their graduation exercise. You can see samples from previous years on our homepage at tortoisecapital.net. So, enough of that. Nice work, Brian. And you can see him getting beat up every night in here in his trade firm. That's where you learn something, is by having the courage to post your charts in here. And he's doing us all a service when he does that. So thank you to Brian. All right, so we'll shift now to the hybrid swing portfolio, or the 30-minute intraday, 30-minute charts, starting with Alcoa. There was yesterday's orderly collapsing dragon, and then we cashed it near the close because you don't know which way it's going to gap. What it did was just have an orderly open and continue to fail through the previous belly of the RL10. So that is a continuation pattern. So I just put the position back on. It does exactly the same thing. It rolls down and then reverses. Now when the RL10 reverses, I take the edge of the dragon exit, and that's a little better than 1R. Then it continued to break through, and I said, you know what? I've made some money in here. Let me invest in the SSC and give that a shot. So we got about 0.5 in hand, and now we're speculating on the long side. This was a price level where we saw that kind of move before. You notice that we've had 3 legs down, and the third leg was shorter than the second or the first leg. So the downward move is running out of steam. And that looks like it's holding support a little bit higher than it did before. So this is quite a pullback, but I'm ready to play that with that speculative SSC. Now, because it's an SSC, that also means that if that RL10 fails, I'll be short collapsing dragon. If it falls below the 10-day low, second position, that's my trading plan on the other side. I'll add a second position if it breaks above this peak of the RL10, and a third position if it breaks up here greater than the 10-day high or the peak of the RL10, so up around 30. So that's what I'm going to do in Alcoa for the next week or 10 days. AI initiated the supported spring crossing in the usual way. It's holding about an R. Amazon supported spring crossing, holding about an R. Caterpillar took the collapsing dragon short. It was a gap down. It sold off hard. Could not fail further. And gave me a edge of the dragon exit for about 1R. I gave back more than an R, but I'm still satisfied with that trade. And then I noticed that I did not chase, but it held support at the same level and gave us a 1, 2, 3, and that's this. This feels like it's trying to bottom out, but I didn't want to hold that overnight because there's no support over here. This was achieving new depths, so I will be ready to trade that long if it goes north of the PSAR flip tomorrow. But if it fails below 264, I'll be short. Cliff caught a 2, holding about an R. CVS, no trade. I missed the short side trade. I missed the PSAR flip. So we'll just play this one. We'll be ready tomorrow. The move in the afternoon caught me by surprise because I have been thinking about this one to the downside. I just missed that one because of span of control. But I think I'll be ready to resume that one to the upside. Or if it breaks below the RL10, I'll be ready tomorrow. Dish Network, I took the continuation collapsing dragon. It never failed further, so I got out basically a scratch or a no lose plus dinner for 2. Devon Energy just continues to reward. Gap down. Okay, here was the short. Yesterday, consolidated, gave that false little head fake. Looks like a little Loch Ness monster. But instead, it gapped down, volatility and energy. I take the standard risk box, hold my nose, take the short. It collapses immediately. And then here's a 1, 2, 3 exit at the edge of the dragon. And on 1 unit of risk, that one returns 5, 6R. There was probably at the 2R level an opportunity for a second position, either there or here once this sideways collapsed further. So I'm satisfied with the 6R. I also don't want to hold that one overnight because this can be gappy and because it makes strong moves intraday. Because it's responding to oil, which does trade continuously in the futures contract, but Devon Energy has to get its moves to react to the change in the price of oil in 7.5 hours, whereas the energy contract is open all day. So that's Devon. Electronic Arts initiated the Kata 2 and PSAR flip. I gave it an hour to work, and it kept working, and it gave 2R and continued to grind and close pretty well. No trade in emerging markets. Ethereum, no trade. I like the sideways support that seems to be forming here. So if that's true, that and the PSAR flip, which it did, this could be the location of the next move to 11, to 1140, 1150, and beyond. So we'll be ready to trade that to the upside. If you are a currency trader, you can play the breakdown looking for 1010. in the coin itself. Mexico. Um, so I tried the. That's where we closed a 2 day short for massive gains. I tried the PSAR flip and SSC here. It failed for -1R and then reversed. I just put the same trade on. Now it's holding +1R. I could have taken the revenge trade, but I'm expecting more tomorrow, and I want to be in that position. So basically a scratch for the day, but betting on the long side. Um, Brazil is essentially the same trade. We closed that one yesterday. PSAR flip, it gave me about an hour and a half of goodness, and then I held it as long as I could, and then slippage I ended up scratching. Doesn't bother me. It's holding stable here. I'd go short at the PSAR flip and long on a breakout either here or above the hump. Either one of those is fine. Intel, caught a 2 long. IP, a fractional win. Real estate, SSC, we're holding about 2R. I like that one. That one could be the sign of a nice 3 to 5 day swing all the way back to here. I mean, you don't really think that U.S. real estate's going to zero, do you? Of course not. So maybe that's the sell-off from 81 to 76. That's -15%. Or -10%, excuse me. So this could be that nice turning point. I'm playing it that way. Regional banks initiated the COTA 2. I consider that one the perfect trade yesterday. To close right there, fully satisfied, not hungry at all. It gave us a double bottom, PSAR flip, and it closed really nicely for a little over an hour. Mattel, no trade. McDonald's, another perfect trade that we closed yesterday. Today it just had an orderly move, no new low. PSAR flip, quietly bringing home 1R. Boy, is that a change in mindset. That's a 10% sell-off from up there. So I'm liking that turning point in McDonald's. There's a COTA 2 available in Merck. I didn't take it, but I'm ready for tomorrow. Microsoft, I took I was late getting into the PSAR flip after the sell-off. I was late getting in. It rolled up, and I took the dragon exit for a fraction, a 0.5. It then reversed, and I said, I like the higher lows. That's a COTA 2. It could get up to here tomorrow. So I re-entered shortly after that exit, and it's about 0.5 in hand. I like Microsoft on the long side. It's trying to get in gear. It's clearing its throat like a big diesel engine that does work. All right, this is the marijuana ETF. Couldn't find a way to trade it that whole time. Yesterday, or this morning, I'm sorry, there was a gap down, and then there's a 1, 2, 3 entry. So I gave that a try. It came to here. I scratched that, stopped in reverse because it was aligned with the PSAR, and it came down to here. And we're holding +2 and ready to get further short tomorrow. There was little to no sustained buying pressure. NVIDIA. This is one I tried I consider that an SSC. Scratched it. It held support. It came back up. I feel like that's a COTA 2. Long, and now we're holding about 0.5. I like that in line with the general move in tech that was better than the rest of the market today. So NVIDIA, we like that one. Clean energy, and closed another, I think, a perfect trade in a regional, like, commodity ETF. I consider that a perfect trade. And that was enough for a SSC, and that's holding 2R. So let's see this thing go. That'd be nice. Rivian, we got the short on that the other day. I just missed this one altogether yesterday, but we did get the PSAR flip here in the second 30-minute segment of the day. Took a standard risk against the belly of the dragon, and that thing closed well. This could have been a second position, but I'm expecting a test right here, and I didn't think there was enough gain to justify a second position because I expect it to stall there. It could go higher, but who knows? Nobody. But I like this one. I like holding it there. We've got 1, 2, 3R in hand. Satisfied with that trade. The S&P was a kind of a grinding, caught a 2 up kind of day that closed well. Treasuries, I missed the PSAR flip. That's actually playable. Tesla, I got the Kata 2. I see that as the Kata. I see this as the support level, and there was the PSAR flip, so I took the long position with the standard risk. When it cleared the whole deck right here, this looks like free and clear. Second position, it worked well. I thought for a moment about a third position, said, nah, not so much. But I like that one. We're holding 1, 2, 3 on the first position, 2 on the second one. That's about 5R on 2 positions and recovering nicely. U.S. Steel, I tried a Kata 2. It failed pretty quick. You know, it gave me a little burst and then started to fail. So I thought I'd just capture one and make some bank. So pretty good day at work today. All right, sniper trade of the day. So now we are on 3-minute chart. Here's where it closed yesterday. And this gave us our OR3. After it closed here, it opened and then shot up through here. So we get the standard entry with and then this is the standard risk box. Now, anytime that the standard risk box, which is an R10, is bigger than the OR3, it makes me think that this thing is in play because there was a lot of movement in that first 3-minute bar, and that's my normal noise. So that's a directional move. So we're long with a standard risk. Check or hold. And my only job is to get my stop above my entry so I can lock in no lose plus dinner for 2 and turn this thing into a science project to see how much it wants to give us once I take all my risk out. By this time, 3 or 4 bars in, I had better have my stop up to about here so that I can lock in that much. That's already locking in a little over 1R. And we're getting close to a 2-hour battle drill, if you believe in that. I take the standard exit at the edge of the dragon. So it's moving up nicely. It starts to chop around. That's enough to make the RL10 roll over. As soon as the RL10 rolls over, that looks like 12 o'clock on the clock face. Then what I'm doing is accelerating my stop from down here by the PSAR up to the edge of the skin of the dragon, and then that gets me out at the skin of the dragon. So that's what I can claim as mine, and that's about 2R. Checker hold. You've seen me do this a couple hundred times in the last couple months. The dragon, the routine dragon exit. What would you call that entry? Kata 2. It might be an emerging dragon if we, if we were very strict and we drew that line from the top here. It's right on the boundary of emerging dragon and Kata 2. There's our standard wrist box. It's the same. The new box, same as the old box, for those of you of a certain generation. After that little momentary pause, which doesn't even get into the dragon, it resumes. By this point, I feel like my stop ought to be about here, so I can lock in 2R on that one. The RL10 rolls over here. I should have been out here. If we would call that the dragon exit, because the RL10 is rolled over, and now I'm tracking the edge of the dragon right there. That's a really good exit, better than the one I got, which was here. Plus, you wouldn't have had to eat that little moment of angst. Still, what are you going to do? Could be short. If you'd been short that on a owl short, you wouldn't lose any money on that trade. Now, as you look at this position right here, what is the pattern that's coming into your mind that you're stalking? What are you stalking right now? I'm going to draw this. Here's your last closed bar. And the new bar opens right here. Here's how I read that. What's the price that I want to be long? I want to be long if it goes above that line right there. If it goes above that line, I want to be long, and I would call that a Kata 2 entry. If I waited for the top of the dragon or the top of the RL10, you would call those emerging dragons. But I want to be long right here. So I just draw that trade frame right there. Now on the short side, let me say it this way. If I'd gotten long right here, what is the adverse price level that makes me get out? How far do I let that thing? Do I let it come all the way to the VWAP? Nope. I could just take my standard risk and chunk it up in here, and I would realize that I could either be short at the belly of the dragon or better, the belly of the RL10, because this risk is approximately that risk, about the same. So, in fact, this is my yellow zone in here. As you know, the price is entering that yellow zone when I look at it that way. Because I definitely want to be long if it breaks above this, and I definitely want to be short if it breaks below here. I could even think about a second position if it breaks below the VWAP, and certainly if it broke below this RL10, I could add a second or even a third position. And I'm not allowed to be surprised if it gets all the way back to here and the OR3. So this is a compound critical state, and this would be a collapsing dragon. So now what I'm doing is I'm just stalking. Price enters that box right here, and what is it going to do? I don't care. I know what I'm going to do. It has to break out of that box. Check or hold. So if you can, the smaller you can compress your risk box, the more quickly you can go from patiently stalking to a trade frame, and then that works. Now, this is what we do in the bar by bar workshop. There's about 200 examples of live trading with coaching, with decision points. The guys who have taken that, actually the students who participated in it, as the students being coached by me, said it was the single most powerful learning experience they'd had. We did it live in the workshops or the podcast just like this. That's on sale in October for $4.97. That's pretty good stuff. And what does this thing do? It breaks out, so I'm long. That's a COTA 2. It's not, and there's no new information about how strong this is until it can break above the RL10 PSAR, right? So this is just the tactical trading space in here, and all I want to do, my next job is to get my stop above my entry so that I can lock in some gains, no lose, plus dinner for two, and turn this into a science project. Check or hold. I waited as long as I could. Waited longer maybe than I should, but that's all right. You don't know that. This would have been a slightly better exit and a dragon exit, but I was also holding out the possibility of this, and I knew I was going to respect that. I was not going to let it go negative. So I held out as long as humanly possible and took a fractional win. Check or hold? I do like the fact that the RL30 is pointing up. That ain't bad. We're still well above the VWAP. So even though I get out here, I still have a long side bias because look at all the higher lows. If this holds right here and resumes, then the RL10 is going to hold right there, and then this would just be another COTA 2. Where do I want to be short on this thing? If it breaks below the belly of the dragon or the belly of the RL10. Still, I want to be long not later than the top of the RL10. So for me, my yellow zone would probably look like this right now. Could you be short on a PSAR flip? Yeah, you could. This was high, that's a lower high, but after a nice strong move like that, I don't know. I don't mind waiting for this one or that one, but I could see how you could be aggressive at 1, conservative at 3, because now an entry short at 3 would be close to a VWAP short. So that's really a 4th location you could be short. So type into the chat box where, now that you just got out of this position, where would you get short? At 1, 2, 3, or 4? Where do you get short? I see a lot of votes for 3. That's reasonable. Yeah, I don't argue with that at all. So this is an example of what we did in the bar by bar. And would you have any reason not to get long here? Could you get long at 1? Easy. You might even say, could I get long at 2? Long at 1, long at 2, and long at 3 if I broke above this RL. So those are the places where you could legitimately get long. I would wait for 2. And I think I would go with 2 and 2. But I could live with 2 and 3. That's the kind of work we do in the bar by bar to lock in the mentality of continuous framing. That as soon as you get out, you're already into the next trade. Where do I draw my yellow zone? So the way you do that is say, if I just started going north, at what point do I feel like I have to be long? And then that becomes the initial upper limit. And where do I want to be short here? And then I can refine it by looking at these different measured moments to come up with my 1, 2, and 3, 1, 2, 3, and 4, and then make my trading plan and live with it. Bar by bar trading. Well, Lou asks, how much, if any, does time of day come into your thoughts on a trend day? That's answered in the Foundations course and on the homepage where I talk about the time of day. And that lesson, in that lesson, I say, look, there's, was it 6.5 hours the market's open? And I divide that into 30-minute segments. And the first 30 minutes is crazy. The last 30 minutes is crazy. And there's 90 minutes at lunchtime where we expect the Z3 lines to compress. And so you get different trades at lunch than you do in the 30-minute. You get 4 30-minute segments in the morning after the opening segment. You get 4 30-minute segments in the afternoon after lunch. And I have to be out of my intraday positions with leverage not later than 30 minutes before the close, because as everybody else is unwinding their positions, this is crazy. So the time of day influences what systems I'm looking at, what continuation patterns I'm looking at. If I saw a gap down and then a really strong move in that first morning session here, that 2-hour segment, I'd be looking at trying to preserve those gains in the lunchtime. But I would also be looking for some kata 2s, and maybe I see a Z3 pinch and a breakout. And then in the afternoon segment, what I'm looking for is, either after a nice move up, I take that size and I cut it in half, and I say I wouldn't be surprised if it went up a half a leg or it reversed half a leg, and I'm ready for that kind of turning point. But the time frame of the day is the same for me whether it was trending in here or not, because there's plenty of times when you get nothing during the day and the lunch, and then the afternoon a piece of news will come out, or guys are trying to front run an overnight move, and they do something in the second half of the day. You see that on Fed Day all the time. But go listen to that discussion. There's 2 really good videos in there that I've had on there for a dozen years. One of them is how to do the prep for the day, all the things that it takes to go through it so that at the open, I am ready to trade. How do I get into that condition? I answer that in the prep video. And then once I'm ready to trade, how do I trade? By organizing the day into 30-minute time segments. You know why I like the 30-minute time frame? Because it aligns with exactly that. There's 13 30-minute segments on the intraday trade. 13 decision points I got to make. So whether I'm doing a 30-minute bar, or I'm going to, in this 30-minute segment, I'm going to drill down into the 3 minutes for a sniper trade of the day or whatever, that's always informed by time of day. Back to our schedule. Sideways chop. Now, what's the justification for this trade, and what would you call that pattern? What's the pattern, and what's the justification? Answer: lower high, lower high, lower high, PSAR flip, lower lows. That channel is now shaping downward. And here's a PSAR flip. And there's my standard risk box. Now, this is already a collapsing dragon off of that move, but the real collapsing dragon probably happens here, which is very near the VWAP. But I realize I can now get a collapsing dragon on this thing. Now, I want you to notice that the PSAR is right there. If that reversed against me, I'm not going to wait for that whole thing to violate. The PSAR flip is enough. But I'm short. My first target is here. That's where I breathe my sigh of relief. If it fails below the VWAP, then I'm looking at a second position somewhere down around in here. Because that cracking of the VWAP would negate all of this price action north of the VWAP. All the good feelings would disappear. So at some point, if it just continues to fail at this rate, it's going to run into the VWAP somewhere around in here. So there's about this much time frame for something to happen. If it's going to happen, it should happen large inside this amount of time because of this convergence point. As volume during the day dries up, the VWAP moves less and less because it's carrying the load of all the weight of previous shares traded, and they're not trading as many shares, so it's hard for the VWAP to move, and it actually acts as a magnet during the day for price to come back to it. So let's see what happens. And nothing. It splits the difference and gives me a PSAR flip. And that now feels like a COTA 2, does it not? The fact that it failed to fail below the VWAP, and it held support where it held support before, I'm entitled to believe that this thing could get to here, because the last time it held support here, it got this high. If it gets above this, then it's interesting. That makes this the tactical space, and all I have to do in the tactical space is get my risk above my entry. And again, I'm not taking that much risk on this thing anyway, because if the PSAR violate, I'm only really risking that much. But I set up the architecture. This is 1.0 execution risk. But I'm going to execute at that price level because that's where the bottom of the RL10 is. So I've limited my loss to about minus 0.3. Checker hold. Oh, joy. Hey, dummy, where was your second entry? Span of control. Too much other stuff going on. Exit near the end of the day. If you rack them up, 8R potential. Trading it in a standard way. While we're here, I want to talk about the Tesla trade for Hamad. On the 30-minute chart, this is the indicated entry at like 290, which is here. That trade, or that signal, is this signal. This little red circle is where you got out of that trade. And then you chopped around here all morning. Now, you still come out of this at 0.6. That's good. My point would be, when you look at the 30-minute that's no reason to get out of that trade, because your risk box is down here. And you get all of this move on the 30-minute chart. Now, the first place you could legitimately think about getting out is here, when it comes up at the edge of the dragon because the RL10 is rolled over. If you did, that's your re-entry. But otherwise, your exit is up here, which is up here. So by trading the quiet 30-minute bar, which, don't forget, that's day trading. That's actually a really aggressive time frame. With this much risk, you're going to get a couple R out of that thing. Actually, with this much risk, you get 1, 2, 3, 3.5. 3.5 versus 0.6. And what this helps you do is you don't even You will really see this as a kata 2 reentry, and you won't worry about the Z3 pinch. I look at this as failure to fail, and there's your second leg in the afternoon. So, to Lou's question about that first 30 minutes of madness, then 1, 2, 3, 4. Here's your lunchtime chop, and there's your afternoon second leg up. And that's about 1/2 the size of the full move. You know, your little move from here up is about 1/2 of the size of the move from here to here. If you cut that in half, it tacked it on. And it's easier to get back into it or to just stay in it looking at the 30-minute. Here's Brian. Five-minute Kiwi. PSAR flip. Gets a fraction. I think it's slow to re-enter. This was a higher low, and as soon as it takes out the high of that one, I want you long right there. Then that actually pays better. I love that re-entry. Maybe here, maybe there. That's still not bad. I could see that as a short. You're front running the PSAR flip, but you did have 30 minutes of it rolling over, and but you don't get the P1 until here, and that's where. So this is an aggressive short. If you do that, then it's supposed to fail right away, and it opened here and started going up. I'd be out of it right there and long right there. You speculated, didn't show up. Now you're back tuned into this thing, and then you get a slightly better entry than this because you get an entry here instead of here, and that would have been a full R of difference. And that's a good exit on it. So I think we could have done better in that. George, this I understand wanting to get paid, and it comes down to here. Then you get a higher low or an entry, and up it goes. There's nothing wrong with re-entering here, riding that up, and then exiting anywhere between those two so it stays positive. Still 0.2. We won't sneeze at it. PSAR flip on the upside. Again, this is supposed to work right away. It doesn't. It fails. And now I want you to notice the PSAR never flipped. So that exit, when it fails to follow through, that's information. You could be short right there and you get to here and it starts to reverse. We could have made bank on that trade. And then we could be long here. Now, you don't know it's going to stop there, but you won't lose money on that trade. You have every reason to believe it could get to here. Gave back too much on that one. Find the movers. That should be a stop and reverse. You have a 3-day sell-off in real estate, and then it gaps down and doesn't fail further. You get a large reversal and a PSAR. that has SSC written all over it. And that's a 2-hour move for you to figure out how to not lose money. And then this little continuation. Get ready for this thing to go tomorrow, because this was day one of a recovery after that. That's what turning points look like. Am I predicting it? No, but I'm prepared for it. All right, here's a, where are we on this one? Okay, so this is a 10-minute on this side. Does that look right? Yeah, okay. 10-minute and 3-minute, I think. Yeah. We should be getting, here's, yep. 1, 2, 3 entry, PSAR flip. There's more there. Relax. Cliff. Now, I want you to notice how, I sent you a note on that, let's say. Look how smoothly the Forex trades for you. Cliff. Let's see here. Where's my... So this is the 3-minute over here. Oh no, I'm sorry, my bad. That looks more right. $30-minute here. So that's this one. We should be smashing that. And we do. Because that's this move. That move right there is short. It's hard to see that in here, but that's actually this move right here. Yeah, those two are these two. I feel like we should be getting better than that. But still, that's good work. Yeah, and this is the same thing as the the argument for the 30-minute bar. You know, yesterday's little fake. Here's the breakdown, and the dragon is down. The PSAR is down. That's a great entry. That's not a reason to get out unless you're overthinking it on the 3-minute. We should be short on this thing right around in here and just enjoy that entire move down. 30-minute bars. And Tesla, you know, the 30-minute bar gives us we would not get short on that one on the 30-minute bar. We would get long right here with a wrist box at the belly of that. Look at that move. From 250 long, 246, a $4 risk. And the exit indicated is probably up in here at 260, so that's about a 2.5 R. That should be 2.5 R. Oh, I think, is that the one we showed? Yeah, okay, sorry. It's still true. Alrighty, we remain in sideways volatile. Today was actually a bit of a recovery day. Grinding, but a recovery day. Still sharply volatile. You should make sure you know which ones are suffering the most and where the strength is. Tech. Uh, the breakouts were all to the downside. I mean, McDonald's, for crying out loud, 10 to 1. That's got to be getting some people's attention. I would just have to go back and look at that one again. And it was up 0.5% today. That's what the ended. Let's look at the 3-day on this one. Yeah, boy, oh boy. That's Dish Network, sorry. McDonald's, dummy. Today was the first time the free fall stopped. That last little bar looks like this. There's a little bit of recovery in the afternoon. And it's cleared the deck of all that resistance. Is it? I mean, we made the case last night that it could be going to here, but that's also what the first day of that's first mouse buying right there. That's fund managers buying McDonald's on sale from 300 to 250. That's a 15% sale price on McDonald's. Hear me now, believe me later. The ETF's also getting smashed. Tons on a auto framer. Everything's in the auto framer that you could want. I leave it to you for framing. Nothing squeezed. Today was a big directional day again. Only one squeeze in United Health. That's everything we got for today. We'll get this published and posted in the usual way. So that little exercise I went through in the detailed bar by bar with reframing and dynamic framing in both directions, that's what's featured in the bar by bar workshop that's on sale. I sold a ton of that for $1,000. It's on sale for $497. If you're in the sound of my voice. All right, take good care, guys. We shall see you tomorrow.